Hey everybody, Marty Mazzora. It is the 8th of November 2012, 2 days after the presidential election, and I want to talk to you just briefly about the market. Yesterday we saw the Dow take a nice 300-point drop, so it took that hit. Many people are speculating that it has a lot to do with the results of the election. I will tell you that early in the morning, futures were actually up, and then they seemed to come down on news that the European Commission thinks that the European economy is going to be worse than expected. But then I think there was a whole lot of stuff being said about the fiscal cliff that made the market nervous as well. And Lord knows whatever other issues were on the minds of sellers yesterday. And again, I've always said that you really can't know. We're talking about thousands and thousands and thousands of people who are transacting stocks on a given day. To know what motivates them personally is impossible. Although you can look at the headlines and you can watch trading action and understand that Wall Street traders, the real short thinkers in the market, do have a lot of influence on day-to-day volatility, of course. Well, but it's very simplistically saying or thinking what happened is that people who held stocks, the owners, got nervous, and for whatever reason, and decided to sell. The folks who were poised to buy heard the same noise and held on to their cash a little longer because they thought, well, maybe there's better opportunities. So by the end of the day, the market closed out, or the Dow closed out 300 points lower, which simply means that these two people got to exchange the way they wanted to. This person, the owner, probably, this person got the money. This person over here got the stocks. But at the end of the day, they both got what they wanted. One was able to sell, one was able to buy. The market is a beautiful thing. The pricing of stocks really relates to what motivates these people and what they're willing to do. If this person just put in a market order, meaning sell at whatever price you can get, they let the market came down simply because buyers weren't inspired 300 points higher to buy stocks. The good news is something got bought, or people, I should say, somebody was willing to buy stocks yesterday. Half the people I talked to yesterday, it's interesting, I went through this in my head this morning. I talked to a number of clients yesterday, of course, about what was going on. Half the people I would suggest, based on their comments, were inclined to sell if they were left to their own devices. The other people were aggressively wanting to buy this 300-point dip in the market. And folks, again, that's what makes the market work. My point here is for any of you who are nervous about this, I want you to just think about this process here and understand that there will be somebody there to take those stocks off your hands if you become entirely inclined to sell. But understand there is a reason in their minds that they're doing that. Whenever I make a recommendation to clients, the last thing I do is I ask myself, let's say it's a buy recommendation, I always ask myself, okay, now I have to go buy it on my client's behalf. Why would anyone sell that to me? What would be the possible reasons that they would want to get out? Well, if it's such a good deal, why are they willing to sell? I'm never going to know, of course, what any individual, or any group that holds all the securities that I may want to buy might be motivating them. But it's a good thing to think about. It adds to the whole due diligence process because it makes me play devil's advocate. When you're selling the market, of course, it's the same thing. If I'm gonna issue a sell recommendation, I have to say, okay, well, who's going to buy this thing from me, and why? And why would I be right, and why would they be wrong? Here's what we want to avoid, folks. Emotionally based investment decision. I am in no way, I promise you, trying to keep you in the market. I'm just trying to keep you thinking about things long term. I'm going to add another whiteboard presentation, probably ones that I've already done, one or two to this one. I want to do kind of this little series on the market and on market volatility to help you have what I think is the healthy perspective. There's nothing wrong, by the way, with being a seller, nothing whatsoever. I prefer that you sell on your own terms, based on your own circumstances and your own financial planning, not based on noise, because this noise tends to change. I mean, if this goes away soon, you're going to see this person coming to market over here, wanting desperately to get in, and you're going to see this person wanting to, maybe still wanting to sell, but wanting to hang on for a while. Why? Because prices are rising. And of course, in our future, there will be events that continue to push the market strongly in either direction. We got to keep thinking long term and not get caught up on this short term stuff. Thank you for watching and listening once again. Have a great day. Take care.